MSTR MicroStrategy, they're not being valued at what they should really be valued at.
The absolute value of Bitcoin's change in market capitalization is going to bring in exponentially more new users to the market.
You think that Bitcoin is an almost certainty to overtake gold.
The depth of the gold market is significant. You can own 100, $200 billion of gold and slowly off-ramp that. That's kind of Bitcoin's advantage. Where Bitcoin is at a disadvantage is...
Bing bong. I am back with another edition of the State of Bitcoin podcast, where I've got the man, the myth, the legend, Eric Yakes in the house, where he's coming to us live from the space in Denver. But Eric, we've got a lot of craziness going on, and I've heard you in a couple interviews that say that you think that Bitcoin is an almost certainty to overtake gold. Now, I want you to dive in what you think that would mean for the Bitcoin price, and what that would mean for central banking, as they've been scooping up gold at an all-time rate.
Ooh, that's interesting. For the Bitcoin price, it means up. The interesting relationship between gold and Bitcoin is that I was looking at the chart. If you look at Bitcoin denominated in gold, like the ratio between the two charts over the past, 10 years, Bitcoin's been definitely outperforming gold, but from like a cyclical standpoint, as they start to line up, I think it's going to be really interesting to see what proportion of performance has Bitcoin ultimately gotten from just macro characteristics, aka characteristics that are causing people to invest in gold specifically. How much has Bitcoin actually benefited from that versus Bitcoin actually just, taking market share from gold? It's kind of this big uncertainty that I don't know if there's some sort of theoretical number of people who have sold X amount of gold and instead bought Bitcoin with it. And that could actually be a lot lower than we'd expect today. And that Bitcoin's really been benefiting much more from macro forces around it. And, in the same way that gold has been. So that's the interesting dynamic, is to put like a price on Bitcoin. It's like, well, at the current value of gold, whatever it is, it's around $1 million a Bitcoin or something would achieve that type of market capitalization. But the type of scenario where gold is, or where Bitcoin is taking, like has consumed the market of gold, it's gotten to that point, is a scenario where gold has likely done very, very well, and its market size has grown very significantly over that period of time. So if we think it's going to take 5-10 years or whatever it is for Bitcoin to take the market of gold, I don't think it's out of range to assume that, the market size for gold, which is just the market size of people trying to hedge themselves against failing fiat currencies, is going to triple, quadruple, or some very much, a much larger potential market size at that point. And then, so Bitcoin taking share from gold means that it's consuming that specific market, and that specific market's going to be a lot bigger at that point too. And then we're talking about multiple millions of dollars per Bitcoin to ultimately achieve that. That was a price question. I forget what the other question was.
Yeah, the second part of that question was then what's going to happen to banking and central banking, because central banks have essentially been scooping up gold at an all-time rate currently.
Yeah, and what's interesting about gold is if you kind of look down in of the known information that we have and the characteristics of ownership, central banks are a very, very large proportion, but actually jewelry and bullion is still about an equivalent amount of proportion of the market of above ground gold that exists today. So central banks are big. And I think the best way to really look at this question when we're comparing Bitcoin and gold in the interest of central banks is to, fundamentally break down what is the interest of a central bank or a sovereign wealth fund or some sort of, government controlled de facto entity that is, holding reserves and resources on behalf of a country. And the two priorities that I think central banks are looking at when they look at reserves are primarily, what is the stability of the asset and how deep is the liquidity of the capital market? Those are the two primary. And then you have, costs of verifying and custodying the asset itself, the ability to transact with the asset, how portable it ultimately is. And so being able to do those things permissionlessly with transacting and with verification and with storage, that's kind of Bitcoin's advantage. Where Bitcoin is at a disadvantage is the stability of its price and the depth of liquidity around its capital markets. Now, they're pretty significant at this point, but when we get into this, world of central banks, their expectations are a bit higher around that. And they're really only participating in markets that are extremely large. And that's gold's advantage. While, gold has its high friction to transact in the physical markets, the depth of the gold market is significant. You can own, $100, $200 billion of gold and slowly off ramp that in a much easier way without moving the market than you can with Bitcoin. And I think that that's one primary factor, and the stability of the asset's price as well, that gives it an advantage in the near term for central bank adoption. Now, everybody who starts to understand Bitcoin around the world can start to realize, well, it has these other potential benefits. And then if we understand it fundamentally, if we understand that Bitcoin has fundamental properties to where over the long run, excluding the market of like jewelry, Bitcoin would be adopted as a superior hedge against inflationary monetary assets over time. And as long as that exists, then, the astute investor is going to conclude, well, so it's like gold, but we actually get exposure to it capturing market share from gold as well over time. Therefore, why the hell don't we invest in this today and hold it for the longer term? So it's a much more longer term focused investment thesis. If they believe that these negative characteristics associated with Bitcoin, of its volatility and the depth of liquidity in the capital markets around it, are eventually going to go away over time, then the question is just time. So if that starts to change over time, then it's a much more longer term. It's a smaller allocation. It's a riskier allocation to them. But we're talking about massive, massive markets here. So if you look at the total amount of gold reserves today, and we're to say, okay, here's all the gold reserves that are being held by central banks and governments around the world, and we were to take just 5% of that allocation, and that was to get converted into Bitcoin, that the size of that market is larger than the current ETF AUM. That's just 5% of just gold, not even their total reserves, just the gold proportion. So it's massive, the types of numbers that we're talking about here. And I think it's certainly within reason that rational central banks, within the next 5 years, we could see like an average of the holdings achieve that number, if not significantly more. So then the question in your mind is, well, if it's that significant, it'll be more significant because that market's growing as well. The value of that gold reserve is growing as well. So that capital being shifted into Bitcoin in 2 to 3 years is probably going to be a lot more capital than it is today. So we see all these variables that are growing, and yeah, I think that when we put all of that together, the potential for it to move the market in Bitcoin upward can be very significant over the next few years, because we look at how much the ETF and simply the expectations around the ETF were able to move the market. And now we're talking about these sovereign markets that are growing significant rates because people are shifting away from fiat more towards commodities. And these markets have the potential to have, double, triple in terms of like the impact that like a Bitcoin ETF had just in the beginning. So yeah, so there's a lot, and it's big, and it's very bullish.
Self-custody can be a daunting task. That's why I've partnered with Bitbox. They have the best hardware wallet. They make it the easiest to put Bitcoin in self-custody. So go to bitbox.swiss/greencandle today and use promo code greencandle, and you can get 5% off your entire order. They make it so easy, all in one. You could get the hardware wallet, you could get their punch plates, you could do it all right there on that website to make the self-custody experience the easiest it can be. So visit bitbox.swiss/greencandle. Use promo code GreenCandle, get 5% off your entire order, and get your Bitcoin off an exchange into self-custody today. All right, enough for me. Let's get back to the show. Yeah, you said, you dove into a lot of stuff, but one thing in particular I want to dive into is what you said. Basically, the gold market, the big utility now is just simply for jewelry. And it seems like that's kind of like the growing trend. So outside of that, do you think in over time, Bitcoin will essentially eliminate gold as an inflation hedge, or people viewing it as an asset and simply just viewing gold as something luxurious to maybe wear around your neck?
Right. Yeah. It'll be maybe even kind of like a retro luxury as well. What's interesting about the monetary premium around gold is that if Bitcoin takes that, then gold all of a sudden is going to become a lot more abundant, which is going to take away, like, why do people want to wear gold jewelry? Because they want to signal to people wealth in some way, shape, or form. So if gold becomes a lot more abundant and the value of gold starts to go down very significantly, at least stagnates over time, then maybe it won't be as cool to wear gold jewelry as much. Maybe it's going to be better to wear platinum, or whatever it is. But yeah, it's like the way that you think about the market is like there's like outside of the monetary premium inherent within gold. If Bitcoin takes that, then what you have left is the market for jewelry, which is intertwined with that. So it's hard to say what that ultimately comes out to. And then gold's used in electronics, but that's a pretty immaterial proportion of the total market capitalization, you could argue. So yeah, it could wipe it out pretty significantly.
Wow, that would be a pretty interesting world to see it all dive down like that, and see gold essentially, crash. Because most people that I talk to seem like, all right, well, with gold, they just assume it's always going to be this inflation hedge, right? And but you're kind of talking about Bitcoin essentially sucking away some of that market cap and some of the use case of just the monetary asset of gold. Now, I want to dive into the banking aspect of it as well, because now we've gotten essentially the new administration say, hey, you know what, we're gonna like take the handcuffs off if the big banks want to offer Bitcoin custody for their clients, go nuts, essentially. So, how do you see Bitcoin, I guess, flipping it on its head? Do you see it more affecting the central banks, how they act, or do you see it more of like the private sort of retail type of banks? How do you see Bitcoin, I guess, revolutionizing the banking industry?
So there's a paper that we're diving deeply into this question around right now. We're working with Chris Lane, who is the chief technology officer for Silvergate, and they were the first bank to start building technology within the cryptocurrency industry. And we're looking at this question of like, what's bank adoption actually going to look like? People are saying, banks are coming, regulatory environment is, open enough now with the repeal of SAB 121. And we're like, so what does that mean? Does that mean like you're going to go to your bank and like deposit Bitcoin with them? Or like, what does it mean when banks are coming? And there's a lot of detail around this question. But I think in the near term, when it comes to the private banking system, one, there's kind of two different types of banks, right? You have investment banks and then you have commercial banks. It's a good way to like slice the industry in half. And investment banks help with investments and commercial banks help with deposits and loans directly. On the investment banking side, I think we're going to see a lot of adoption in terms of brokerage, capital markets, people actually creating debt instruments, things like what's happening with MicroStrategy. It's like who's issuing these bonds and who's selling them to people, who's making these introductions. Like banks are all kind of participating in that side of the market already. Commercial banking side, I think, is something people are more interested in. That's been banks have been, one, scared of participating, and two, the regulatory environment hasn't been set up for them. There's this law or guidance, the SAB 121, Staff Accounting Bulletin 121, that basically required banks, which typically they could hold certain, a bank can hold certain assets off balance sheet. So, and what does that mean? It means it's not part of their official numbers. It means it's on some other ledger. The official numbers are really important to banks because depending on how many assets and how many liabilities exist within their official numbers determines the regulatory requirements. Are they meeting these things if they're to be audited by a regulating organization? And are they going to be able to meet their stress tests and things like that that are always happening? So when you have that going on the official numbers, and then you have these off-balance sheet numbers, they want to be able to put a lot of different things on the off-balance sheet side. And this SAB 121 forced them to put Bitcoin as a liability within the official numbers, and then that would screw up a lot of their reserve ratios. It would make it much harder to actually run their business. So that was something that made it very unappealing for banks to want to adopt it in the first place. That's been repealed. So now a customer deposit doesn't have to necessarily be held on balance sheet for some of this. And so that can change the way that banks ultimately view it. And that's one of the primary arguments for like, okay, we're going to have a lot more banks coming now. And I think that what we're going to see, and that we've already started to see, is part of a broader trend. And I think banks are going to participate in this broader trend. The trend's just Bitcoin is being put into other financial instruments. Like, that's the headline. And what does that mean? In the world of investing, you have all these different investors who are, they're driven by mandates. They go get money from somebody else. They say, we're going to do this one thing with your money. And they're forced to kind of abide by those particular mandates, and they play within a particular category. So particular areas of stocks, particular areas of bonds, particular areas of private equity, particular areas of, that you can cut private equity into a bunch of different pieces. There's actual specific hedge funds, which are mixtures of stocks and bonds, and they get into derivatives. So there's all these different buckets of different types of investing you can do. And depending on your mandate, you are forced to participate in the capital market based on that mandate, because you told your investors you were going to do that. And so what's happening with Bitcoin right now is that Bitcoin's just a superior investment to most things. But there's all these people managing money around the world who are like, okay, well, I can only invest in bonds, or convertible bonds is a good example. And because I can only do that, I can't really get exposure to Bitcoin. But maybe we can get exposure to loans that have Bitcoin as a proportion of the collateral. Then the upside of those loans is tied to the value of Bitcoin in some sort of way. So there are these little games that can be played where we can get exposure to Bitcoin through something that falls under their mandate. So the headline is, there's a bunch of friction for investors. And because of that, Bitcoin can get pushed into different categories of investment through different mechanisms. And there's a ton of adoption that's coming to it for that reason, particularly as a form of collateral. So that's the broader trend. And I think that we're going to see a similar thing happen with commercial banks, where it's like, okay, here's a bunch of banks that are lending mortgages for people in their homes. And what could help me get better terms on my loan? Well, I don't have a stock portfolio. All I have is the amount of equity I can put up, and then I have my Bitcoin. So what if I could post my Bitcoin as collateral as well, and get better terms because of the ratio of loan to value that I'm providing? So like, there's different things that we're seeing happening now. Like the Cardone brothers, they launched or I don't know if they've launched it yet, but they have some sort of REIT that they're bringing to market. It's basically like, we're going to invest in a bunch of real estate, and we're going to put Bitcoin in there too. Now, what's that going to do for them? Like, what I would tell anybody who's like, oh, if you're interested in investing in real estate, then go buy real estate. If you want to buy Bitcoin, go buy Bitcoin. There's no need to if you like the real estate in this ETF, that's a different question. But there's no need to really mix these assets. But how does it work for them? They're real estate guys. They participate in those markets, and they want to launch a REIT. And what does that mean? If a REIT is being launched and it has some Bitcoin in it, I guarantee that this REIT is going to be the best performing REIT within its category over the next 5 to 10 years. And a ton of people, and there's a bunch of funds who are like, we raised to invest in the real estate market, and they can only get exposure into REITs on the public side. So they're going to say like, okay, well, this is our way of getting Bitcoin now. So they're creating access to Bitcoin in a new category through it. It's not really any value. It's kind of playing games between frictions in the markets. Nothing really fundamentally is happening here. But we're going to see commercial banks, I think, all around the country that are now allowing you to post Bitcoin as collateral in different scenarios. That'll be big. And then I think they're going to start lending pretty significantly as well into those areas. So lending, using it as a collateral asset, brokerage type services as well, but those will probably be happening primarily through the investment banking side. And there's a few other interesting areas when I think it comes to settlement of transactions with like trade finance and cross-border payments. And we're kind of deep diving into a lot of that right now if we think there's anything in particular. But it's a pretty well-known concept that the cross-border payment market is very broken, and that's because our banking system doesn't make any sense. Banking system is this patchwork system of all these intermediaries who kind of, nobody designed it from the top. It just kind of happened this way. But to move money across borders with how the banking system works, banks have to pass it along from one another. There's all these intermediaries, and they're not using the same type of data formats. And you get into some obscure areas, and people are doing things manually. Other people are doing things on computers. And there's all these pieces in between and all these little details of complication that make cross-border payments very expensive, and they're not timely. They take a lot of time to actually execute. So different fintechs are trying to create solutions to solve this, and like stable coins are being used as a means for supporting cross-border payments, as well as Bitcoin, particularly in the Lightning Network. Through my company, we've invested in a few companies that are providing solutions for this. I think banks are going to also view executing transactions over these networks in a similar way as a much more efficient means for cross-border payments. So that's probably going to come primarily from stablecoin adoption over time. Whereas Bitcoin adoption is going to be more collateral aspects of it. But nonetheless, you can still execute very similar cross-border payments over the Bitcoin network as well, albeit with a bit higher price volatility. And but given the amount of time it takes, that price volatility is actually pretty immaterial over the long term. And I kind of view it as, in the not too distant future, it might become more of a preference if it's a business-to-business type cross-border payment. But so that's one area. And I think the last thing, and this is the big thing that I think people are going to be pretty up in arms about is, well, I'm curious, Brandon, have you heard of the term tokenized reserve deposit?
My favorite thing about Bitcoin is meeting Bitcoiners in person. That's why I'm so excited to tell you guys about what is going on June 14th down in beautiful Tampa Bay, Florida. That's the Sound Money Soiree paired with Bitcoin Day. They're bringing a full day of great talks with amazing speakers like your boy here. And we're topping it off with a black tie event just for you and bring in that hot lady friend. We had Bitcoin cross 100K. We're all getting girlfriends, folks. So come on down to beautiful Tampa, Florida. And if you use the link below, you will get 10% off your entire order, whether you want to go to just the black tie event or black tie event plus Bitcoin Day. You'll get 10% off using the links below. Also, if you're thinking about going to BitBlock Boom in April, if you're going to Vegas in May, or if you're thinking about going to Prague in June, use my promo code Green Candle for all of those. You'll get 10% off your entire order. And come bug me. I hope to see you guys very soon at one of these great in-person events. Enough from me, back to the show.
Yeah.
I haven't. I've heard of a lot of just tokenizing whatever, but that usually is like associated with some sort of shitcoin instead of just on Bitcoin. So I'm curious to hear what you've got for me here.
Yeah. So tokenized reserve deposit is kind of this new term that's going to be used in replacement for a CBDC by banks. Now, I guess a little bit of background. It's like you have CBDC, or like the original term was wholesale CBDC, and that's what if the Federal Reserve were to issue a CBDC, it would be issued directly by them, and then that's the wholesale reserve that gets pushed into the banking system, and then from that, banks can lend in the form of currency, and they can have their own retail CBDCs. So it's like we have a two-tier banking system. Tier 1 is the wholesale CBDC. Tier 2 is the retail CBDC. That was kind of the original vision. Trump administration came in, signed an executive order. We're never going to create a CBDC. We're shutting that all down. And everyone's like, yay, like CBDC is not coming. There is a possibility that bank reserves ultimately get tokenized in the US as more of like a retail CBDC type function. We'll see what happens with the central bank, and if the Fed starts participating in creating their own tokenized reserves, in which case that'd be like a wholesale CBDC they're creating. But it's kind of the new buzzword that's being used in a way to not call it a CBDC, but kind of creating a similar individual digital construct where your bank reserves, aka your money in the bank, is being represented by a CBDC. It's probably going to be able to participate in a lot of these systems, but it's going to be something that's more centralized and controlled by a single entity. And for all the reasons that we wouldn't want this, dystopian future of a CBDC where people can just turn your money off unilaterally through a highly centralized organization, there's potential that could be coming about. That being said, depending on how it's implemented, like the devil is going to be in the details. Like if it was just a retail CBDC directly, for the same reason that it's hard for a central government organization to control just any one bank today without enacting policy through Congress or new policy through Congress, a retail CBDC could still be held at similar legal arm's length, I think. And if that is the case, it actually may not be as bad. And it's no different than if the bank wants to turn your money off and monitor you. Well, they could probably still monitor you. But if they want to turn your money off, they're going to have to, get like some sort of court ordered warrant to issue wage garnishment of some sort, or block your transactions or whatever, or all the different legal means in which they can do that today. So it's not really going to change the game much around that, or it potentially couldn't change the game as much around that. But what I think is the really positive side is that it could be a bit of a Trojan horse, because there's now all this favorable stablecoin legislation coming to the market. And there's a huge expectation that stablecoins are going to get adopted. And what we're really doing is we're pushing a lot of financial infrastructure onto the banking system that, can speak with Bitcoin in some sort of way. And because we're kind of starting to put people into a similar type of architecture, the devil's into details on that as well. We'll see how it all plays out. There's definitely a strong possibility that we're creating a much more seamless way to where banks are going to be they're going to be a decision away rather than from adopting all the technological friction associated, but rather just a decision away from putting Bitcoin into their reserves. And making that actually become a reserve component. So maybe it starts as tokenized reserves, very similar to like what a stablecoin would be, but more government direct. But by getting onto those rails, it's going to be a lot easier for people to start participating in banks and say, well, we only want to participate in banks where Bitcoin is in your reserves. And that's a big idea that I don't think people are thinking about yet. But I could see that coming in the next 5 to 10 years, where if people are using like digitally native banks, there's like going to maybe be like a Bitcoin standard bank that starts to come out of some of this. And there could be a lot of things happening around that in terms of what technologies they choose to use.
Well, isn't that kind of what Caitlin Long is trying to do right now with Custodia Bank? As she's almost trying to make it like a Bitcoin bank, so to speak, where they would be the custodian. And then, I had her on maybe a couple odd years ago, so maybe it's time to get her back on. But essentially, she was saying that, these banks would almost run as like a lightning nodes, so to speak, too. So when you hold your Bitcoin with them, they would be able to get, a little bit of yield for every one of that transactions, because they would be the only ones eventually to be able to have that much liquidity, too. So on top of that, the potential, it seems like there's kind of two paths here, where it's like, all right, we can have banks just try to find some a way around to come up with a CBDC so they're always able to track, or we go on the flip side of things where it's just all those banks eventually get weeded out, and we get banks with Bitcoin reserves and who essentially kind of try to respect that privacy, and we don't have to worry about it. So is that the kind of two ways you see this playing out as well?
Yeah, I definitely don't see there being like, one or the other type circumstances. There's going to be a lot of like Bitcoin native companies that grow to be much larger. They might get banking licenses. Like, what's the difference between a bank and some of these other Bitcoin company financial service providers? A license to rehypothecate certain forms of collateral effectively, and a license to implement fractional reserve lending of treasury assets. That's what a banking license is. Now, I think that, so let's go back to like lending within a bank. I think one of the challenges for Bitcoin companies is that if I kind of view from the bank's perspective, Bitcoin adoption probably falling under a similar veil of consideration as like securities lending, like a margin loan of some sort. And if they're categorically thinking about it like that, then rehypothecation of collateral will probably be happening within these organizations for Bitcoin-backed collateralized loans. And if that's the case, then banks kind of with their license to do some of that, depending on the situation, that can make them much more competitive against, Bitcoin companies that are providing lending today. And the reason being is they're taking on a lot more risk through the rehypothecation process. But that means that they'll be able to offer lower interest rates to consumers. They'll be able to outcompete Bitcoin native companies for a lot of people that want a lower interest rate. Then the question's like, well, will they go bust? And then we know that they'll have access to a Federal Reserve discount window. So they could probably remain solvent still. And it's really hard to compete against a license to effectively fractional reserve or rehypothecate collateral. And so I think that'll be one of the dynamics is how many Bitcoin companies that provide loans are going to want to get banking licenses, and will that create a vicious cycle of incentives that will kind of force them in order to remain competitive to implement similar practices or not? It's really hard to compete in a system when you have to compete against inflationary central bank economics. That's what it boils down to. And that creates this pernicious incentive for a lot of that to be happening. So, I mean, that's one concern. And yeah, but like there's also like the digitally native bank type vision, like Custodial with Caitlin Long. And she can never get the Federal Reserve District. And there's like very obvious political forces that's blocking her from doing that in the first place because she tried to do everything right. And we'll see, I think, where a lot of that comes up to. But it's in terms of like Bitcoin specifically, I think that's a much longer term vision. But being adopted is just like a reserve for some banks ecosystem. Like it could be something that gives them a slight competitive advantage with more customers in some sort of way. And in the same way that Bitcoin adoption for tahinis was so significant to the business itself, like there could be the tahinis of a bank that ultimately jumps into this. You can kind of argue that like back in the day, Silvergate was somewhat of that. They were like the first mover of at least like adopting and supporting and making a huge bet on like the broader cryptocurrency ecosystem. And we could end up just seeing a lot more of that. But if there is like a Bitcoiner bank that ultimately takes off, that would be great. It'd be the first one to start putting it into reserves in some form. That'd be cool.
The best place to buy Bitcoin in the United States and Canada is the Bitcoin Well. You could go to the bitcoinwell.com/green candle and sign up today, and they will give you wishing well tokens. They are one of the only exchanges in the United States that will give you free sats every time you buy Bitcoin. You have a chance to win 1 million sats every time you buy. You get wishing well tokens. You flip the coin down the wishing well, and you have the chance to win 1 million sats. You heard me here, folks. 1 million sats. And on top of that, they have the absolute best over-the-counter service where you can make purchases over $50,000 and they will walk you through the whole thing. They have the best rates in the United States and in Canada. And on top of that, they have the best white glove service where they will take you through those giant purchases just so you feel comfortable. You'll get it in cold storage, and it's strictly non-custodial. They are saying, we want you to experience the true power of Bitcoin and that self-custody. So go to the well, sign up, bitcoinwell.com/greencandle today. Enough from me, back to the show. Now, all right, so we've talked about a little bit about, how Bitcoin could potentially overtake gold, overtake the banking. But a popular aspect right now is people always talk about these retirement accounts. Like, how much Bitcoin do you need to retire? Do you think that that's going to be another way that Bitcoin flips it on the head? Not only, are we going to see maybe real estate get flipped and all these other things, but do you think like the true retirement account is that's going to essentially flip it on its head? We won't need Social Security anymore, and that's another avenue that Bitcoin's going to disrupt.
That's interesting. As long as there's government incentives for participation in these accounts, it's definitely never going to like completely go away. I think that's the one thing. The government picks and chooses to subsidize particular industries with tax benefits. And so for Bitcoin to flip the entirety of it on its head is challenging unless those ultimately, like those subsidies are removed in some way, shape, or form. So with retirement accounts, like Bitcoin through the retirement accounts and like a security or maybe directly. I'm definitely not an expert on how all that works, but I think that could become very significant. What we have seen is, and I guess I haven't been updated on these numbers in a long time, but the pension benefit obligation liability that we have in the U.S. is like in a pretty massive deficit. And similar to that we're seeing in broader capital markets. But it's like all these pension managers have to keep getting pushed further and further down the risk curve because they need to get higher returns because a lot of promises have been made over the years. And the health of the assets supposed to pay the future liability within the pension system is pretty poor right now. So within that area, it's like, okay, well, will Bitcoin become that asset that they all start turning to? And I think we've seen some of that already. That could be very significant. I think we could see a very significant allocation within the pension system towards it over time is, ultimately like the savior of some of these promises that are being made at like a state level, to say, elect me and we'll make big promises for how much the firefighters get paid and policemen and all these people. And yeah, I could see that being very significant.
Yeah, so with these new players kind of coming in, it seems like there's a lot of development, right? I mean, we've got nation states now starting to come in, and now potentially having companies putting Bitcoin on the balance sheet. We've even had 21 start to come on and, essentially just say, hey, we're going to be a strict Bitcoin only holding company. How do you think that this is going to revolutionize just like the investment world? Because it seems like, obviously Strategy B, also known as MicroStrategy MSTR, that was like the best performing stock in, a lot of the indices last year. And so it's gaining a lot of attention. The volume is trading like a Mag 7, even though the market cap is significantly less than any in the Mag 7. But it seems like as you're kind of, going through all this, that essentially every industry now is being, flipped on its head. And that includes just, the capital structure of the capital markets, and that all of these companies like an MSTR MicroStrategy, they're not being valued at what they should really be valued at. And that's why you see the volume and the massive amounts of volatility that we're seeing in there. So I guess this is a long-winded way to say, like, how significant do you think it is for not only the SAB 121, but now for the FASB ruling for companies to hold Bitcoin on their balance sheet? And how do you think that's going to revolutionize business here going forward?
Yeah, it's I think what I'm really curious is to see what happens in the small business side of all this. I think those types of entrepreneurs are the types of people, they haven't been as much brainwashed by corporate thinking about how things should be done. It's like, it's like with our fund, I would much rather talk to somebody who knows nothing about anything related to investing. I'd much rather talk to them about Bitcoin than I would to somebody who's been, trained in X, Y, or Z form of investing, because then you have to go through a process of rewiring them on what they already believe before you can actually describe what's really happening with Bitcoin. And I kind of view small business entrepreneurs as people that won't require as much rewiring to basically get it. Like, oh, okay, yeah, this thing's scarce, like keeps going up in value. I kind of get the fundamental proposition. I've been dealing with the inflation issues, the whole time I've had my business, and here's the solution. And the money system, yeah, that clicks with me. They're not going to have a bunch of like finance mumbo jumbo jargon that's going to tell them like it's a tulip bubble or something in their head. And so I'm really curious to see how rapidly small businesses start adopting. And you're right, like with the FASB ruling, that's a game changer. And if we do start to see significant adoption, I think that there's just going to be it's more like a cultural or a psychological shift that'll start to happen with a lot of business ventures, where at least what we're seeing now in the early years, it makes sense to just be a Bitcoin only like balance sheet company. That's how early we are. That makes sense to do. And if it was much later in the life cycle of Bitcoin, then that shouldn't make sense to do. But I think that's like it's going to be like a funny thing in hindsight. I think, 10, 15 years from now, I think we're all going to be like, remember all those people starting companies that were just buying Bitcoin because they understood how early it was and it made sense to actually do that than run their business themselves. So like all these entrepreneurs are going to they have an opportunity cost in their head with every decision now, that I think in the same way that people who personally own Bitcoin already have that, like constantly balancing that opportunity cost. Do I hire this new employee? Do we expand into a new location? Or do we just buy more Bitcoin? And it's going to change the way that they think about a lot of their decision-making within the business. Which will be really good for Bitcoin, and I think really good for entrepreneurs that are dealing with all this stroke of the pen risk that comes from central banks, comes from politicians, it comes from tariffs, it comes from all these other things, where you're a guy who's trying to run a Mexican restaurant and you have to deal with all this bullshit every day, completely outside of your control. And Bitcoin's going to be their solution to that. And then once that psychological change happens, it could be really rapid. And the small business market is absolutely massive. So I could see there being a lot of like Bitcoin businesses that emerge out of it and perhaps even end up just like liquidating their operations and making their own business just a balance sheet at that point. They perpetually take out loans against it. There's plenty of things. They might even keep the business going just as a means to secure more credit in some degree. And be viewed as more legitimate for that purpose in the eyes of the bank. But as banks get smarter about this too, more and more lending to small businesses is probably going to start happening. And they'll post the Bitcoin as the collateral. So there's a lot of factors and this kind of confluence that I think will be at the center of all of it.
So you think that basically with this, because I was going to play devil's advocate with you, but you expanded a little bit more on that, because, we saw last cycle, right? A lot of these Bitcoin mining companies essentially go levered onto Bitcoin, holding a lot of Bitcoin on the balance sheet. And my stance then was, Bitcoin is so volatile, you need to have some sort of cash reserves. And like specifically from a miner standpoint, you don't really see gold miners or oil, producers trying to hold oil or gold on their balance sheet because of the volatility of the underlying asset. And that's the way I kind of felt, as at least how I feel about the Bitcoin mining companies. Like, of course, you'd like to have them to have some. But it's interesting that you're saying, go almost all in for businesses, especially the small businesses. But the caveat is, we need those lending products in order to, borrow against that. So you can have some of that cash instability there, because, some of these businesses, they do offer in short-term aspects where, they can have that small balance sheet of Bitcoin, but going all in, seems like there is added risk there just because you never know, right? I mean, we could have a 20 to 30% drawdown and, your business just starting out. That doesn't always bode super well for everything, right?
Totally. Yeah. And I think it'll be, very small at first. I just think that, and I guess the time horizon in which I'm talking about some sort of scenario like this unfolding for a business is, definitely over years. It's probably over a cycle. But as an example, like a comparable situation, in the startups that we invest in, a lot of our startups will want to raise and put a proportion of their raise into Bitcoin. So we'll help them with modeling a lot of that out and understanding, here's how much risk you're taking on given the goals of what you guys want to achieve in this amount of time and how much money you plan on spending. What's the total burn rate for your business over an 18-month period? If you were to allocate this percentage into Bitcoin, how much could that percentage, if we assume, Bitcoin goes to where you think it is, how much could that ultimately protect you guys from having to raise another round in the future? Or could you just go 2 to 3 years off this round if it goes up enough? And then if it just goes, 50% drawdown, how much does that shorten your liquidity? And a lot of times it looks, the numbers kind of pan out where it's just like, okay, we might have to raise, if things go south for us on this and we put, 20, 30% into Bitcoin, then we might have to raise a few months earlier than we were expecting on our next round. But if things go much better, we might be able to skip another round and just go straight to Series A. We can just last on this round for another year or two. And that's what's really appealing about it, is can you skip around in your fundraising that protects you from dilution? And that can be really good. So it's a similar trade-off, I think, with business owners when they think, maybe they're not thinking in terms of raising money, but they have a profitable small business. And then the question's okay, well, how much could this be padded onto our balance sheet? And what liquidity can that give me to finance my operations over the next few years? And the more and more they see that, once there's something where it's we've been gnawing away, we've been getting 15% profit margins for the past 15 years. We're getting close to being able to open up our second location. We have a lot of the people set up, ready to hire. But, we need another $100,000, and they kind of take this early risk on Bitcoin. And then that helps them open their second location. And then now they've just stepped up into a new category of profit margin with that capital investment. And a lot more income's flowing into the business. And now they're looking at, potentially reserving even more. The second they have that initial success with it, I think it's really going to change their view around the volatility from it, because the volatility goes both ways. In fact, it goes the upward direction much more. And so there's definitely going to be people dipping their toes in the water and gradually moving into it. And to your point, from a lending standpoint, I think fundamentally, within corporate finance, if let's say you are assessing the credit risk of a business, or not even the credit risk, we'll just say you're assessing the broad financial risk of the business. And you're trying to look at, what you do is you look at all the degrees of leverage within a business. So there's two different broad categories. There's the degree of operating leverage, and then there's a degree of the financial leverage within the business. Operating leverage is certain businesses have more or less operating leverage. The higher your fixed costs are within a business, the higher your operating leverage is over time. So high fixed cost means you have a high floor of costs to get above, but once you're above it, they don't go up as much. Your variable costs are much less. And that means you get a lot more cash flow as you scale the business over time. Whereas low operating leverage businesses, they may not have a high floor, which means it's harder for them to be bankrupt because they have so minimal fixed costs, like software startup. But software startups are good for the second part of this answer. But think think a restaurant. For a restaurant to continue, it has actually a lot of really high variable costs because for a restaurant to continue to serve more customers, they have to open up new locations. They have to have new employees. And there's fixed costs keep going up as they scale. Their profit margin kind of stays the same throughout all of it. Maybe scales a little bit. So that's how you think about the leverage within the actual business itself. And there's going to be different businesses that have different degrees of operating leverage. And then you have financial leverage, and that's how much they're taking out in the actual, like the finances of the business, and how much debt do they ultimately have with the business. So like highly levered businesses with highly levered models, operating models, are typically going to be viewed as riskier from a lending standpoint, whereas businesses that are more scalable and have achieved something near that scale to get break even in their profit margins, those are going to be viewed as potentially greater candidates by banks to achieve a certain degree of financial leverage and take out loans on the collateral. They're also going to be in a much better position to businesses that have more variable costs are in a much better position actually to get a higher exposure to Bitcoin. And businesses that have higher fixed costs, higher operating leverage, they're the ones that are going to be higher risk of downward volatility of Bitcoin were to be too significant. They could have some kind of solvency risk involved on the business. So any business that has high variable costs and lower fixed costs, I think would be more like a prime candidate for a significant Bitcoin balance sheet.
Okay, so you've discovered Bitcoin and are on the path to financial self-sovereignty. But simply holding Bitcoin is not enough. You need to make sure that it's scored properly and you are in 100% control over all your assets. So sharing your keys with third parties and taking on that counterparty risk is not the answer. The answer is pure and simple. It's uncompromising self-custody, and there's no better way to do it than the Bitcoin way. They've got over 25 years of cybersecurity experience, and their team of experts can help you properly self-custody your Bitcoin, secure your digital life, configure your privacy phones, and even establish a Plan B residency if you're looking to do so. So I'm going to help you guys out here and give you a free consultation if you take the first step and visit thebitcoinway.com/green candle, and you can check out the boys at the Bitcoin Way and see how they can help you become self-sovereign. Yeah, and it seems like that's going to revolutionize business now. Obviously, you've got, Epoch, and you guys are looking at different businesses. Now, how do you think that this has kind of, I guess, revolutionized just evaluating businesses, essentially looking at companies who are like earning Bitcoin and kind of, going through that direction, opposed to just, fiat companies that are potentially, just maybe putting some Bitcoin on the balance sheet? How do you, I guess, like level out the businesses that are potentially, maybe going to earn a spread or something like that when somebody is sending a transaction, some remittance companies or something like that? How are you valuing these different types of companies as Bitcoin is essentially, flipping businesses on its head?
Yeah, I mean, there's definitely not any sort of big creative thing that changes the way we look at value fundamentally. I think the only thing that we're fundamentally is that, this idea of like Bitcoin being the new hurdle rate. I think it does make investment decisions much more challenging. And it's because it's just like, oh, why wouldn't I just put my money into Bitcoin? The same thing that, personal investors have of, am I going to buy this new thing, or am I just going to put my money into Bitcoin? Or, a small business owner is going to have, do we open a new location or do we just buy Bitcoin? So everybody's asking this question, why don't we just buy more Bitcoin? And that's for like us as investors. What we're doing is we're looking at businesses that have exposure to growth within Bitcoin, but not just the capital appreciation of the price, but broader growth in its adoption as well. And that's one of the things that I think we will witness over the coming decade, is that the absolute value of Bitcoin's change in market capitalization is going to bring in exponentially more new users to the market. So a 20% increase today, at whatever it is, 2 trillion in market capitalization, is $200 billion in market cap that just went up. How many more new users was that from a 20% increase, 10 years ago in the price of Bitcoin that just came into the market? And then what are those users doing with it? Are they just buying it and holding it as a store of value? Are they using lending products on top of it? Are they sending payments with it? Are they pushing it into some sort of like DeFi type system? Are they gambling with it? There's a million different things that they could do with it. And so the question is like, what else is happening with the Bitcoin once they have it? And are there other more ancillary financial products that are being associated with it? And that's kind of like how we view Bitcoin adoption. So our goal is to get exposure to businesses that grow as the price of Bitcoin goes up, as well as have exposure to all these different vectors of adoption around it. And that's, we view the ecosystem, like people talk a lot about like the Bitcoin ecosystem. It's a layered ecosystem. It's true for like one component of it, but we use the analogy that the Bitcoin ecosystem is a tree and Bitcoin is the trunk. And we kind of view the layered ecosystem, like the true layers, as layers within the trunk. Like Bitcoin's at the core. You have the Lightning Network around it, which allows for, certain faster transactions. There's other things coming to market that provide people to do other things. And anything that's like a trustless way, or at least very minimized form of trust around, moving Bitcoin in some sort of way, shape, or form is kind of like part of the trunk. And then you have all these companies that are branching out of these protocol stack and layers around it. And those are the branches. So our bet is that the trunk is going to grow very rapidly. It's going to be the most rapid growing trunk in history. But we think branches will grow faster than the trunk. And our job as investors is to pick the right branches. What are going to find the most sunlight? Some branches might find sunlight today and end up growing in a completely different direction tomorrow, but they never would have gotten there. They would have died if they didn't find sunlight today. So that's how we have to think as investors is, okay, this needs to be some sort of business that's highly relevant in the next, 5 years and of where we think Bitcoin adoption is going. And maybe over the long term, it could become this much bigger vision. But for now, it's just got to do something that's really relevant today in the near term. Otherwise, other things might outgrow it much more quickly. It's never going to find sunlight in the first place. And yeah, so like that's kind of our perspective on how a lot of this looks. And there's a lot of different markets around Bitcoin that are going to grow really rapidly and just like fundamentally could outpace the price of Bitcoin. If you think about like the expansion of credit on top of Bitcoin and more loans, that's just going to be happening more and more and more. It's going to go through cycles. I think that businesses adopting and getting leverage exposure to Bitcoin is probably going to drive our next big boom and bust credit cycle within the price. And that's fine. That's just how growth works. And that's how markets work. And, hopefully nobody's being defrauded this time and that people are a bit smarter than they were last cycle. But yeah.
Yeah, it seems like it's you're talking about sunshine and tree branches here, and we're recording this just after the start of May, so hopefully it's going to start getting a little warm for you in Denver here. And I want to tell people, like, all right, you're at the space, you guys have a lot of Bitcoiners there. Give us a sales pitch. Why should people come out to Denver? Maybe during the summertime or during the wintertime.
So I was in Prague last year, and what I told everybody in Europe is that Denver is the Switzerland of the US. Denver is best weather in the world. I mean, the more I travel, the more I love Denver weather. We get more sunshine than any other state in the country. It's very dry out here, so it's not very humid, even on hot days, which makes the hot days not as hot and the cold days not as cold. Vail Mountain and Resort is the premier ski resort in the entire world. Denver is an hour and a half away from it. And we don't have a lot of bugs, which is a big thing to me. I don't like getting annoyed by bugs when I'm outside. The space is the premier Bitcoin citadel. Epoch Ventures has our office out of it. And we have our opening art show tonight where we're bringing a lot of people in the local community out. And we have 2 Banksies in the show, as well as a bunch of Bitcoin artists like Fractal and Crypt, etc. So that's going to be a banger. If you're, well, that's already going to happen. But there's going to be plenty of events. We have all these we had the Heat Punk Reuse Summit during ETH Denver. We put on a bunch of Bitcoin build on Bitcoin events with like Bitcoin companies, and we're always hosting events out here with like different thought leaders and things like that. So if you want to get into our private events, where we had Caitlin Long come in and give a talk, you have to be a member. And if you want to be a member, you go to denver.space and you sign up and fill out an application.
There we go. And I'll put all of that in the show notes as well. But you have to tell us, what's your favorite part outside of the weather, man? What do you like to do? Are you you like the food scene? Do you go to like to do the 14ers or whatever the hell that you hippies call them over there, hiking up the mountains every weekend? What do you like to do?
The 14ers are the big hippie thing for sure. I like to lift weights, man. I like to eat a lot of food, and I like to get a lot of sunlight. And I'm testosterone optimizing out here.
There we go. I love to hear it. Well, Eric, thank you so much for joining the show. Why don't you tell people more where they can find out about you and what you got going on?
Yeah, just follow me on Twitter. And then I run a venture capital fund. If you're interested, if you're a founder, if you're an investor interested in what the things that we do, you can see our contact form on our website. That's epochvc.io. Best way to get in touch with me is usually just to DM me on Twitter, and that's just my name is my handle.
All right, and I'll put all that in the show notes as well. Eric, thanks so much for coming on the show.
Thanks, Brandon.
Thank you for tuning in to the latest episode of the State of Bitcoin podcast. If you really enjoyed this one, I've got another one cooking up for you. You can click that right here, and you can go to the next episode, which is an absolute banger, where I'm bringing you only the latest and greatest guests. Or if you're looking for more macro-related content, you could check out my other channel, Macro Insights Pod. I got it linked for you right here. So where I'm bringing you more about stocks, real estate, traditional finance stuff. So go ahead and check that out. And if you enjoyed this podcast, go ahead and hit that like, hit that subscribe button, and tell a friend to tell a friend. All right, enough from me. I'll see you at the next one.